All right. Well, welcome to episode 6 of Community of Wisdom Seekers. And we are here seeking the wisdom of Will King. And he is currently also known as the Kansas LoanMan. Not sure how you got that nickname or how you secured it, but I am interested in hearing that if you're willing to share that with us, Will. But he is here to just share with us what that industry looks like right now amidst the corona environment that we are in. So we're excited to hear some things we can use now and apply to our lives, but also I'm sure there's going to be some things in here we can apply the rest of our lives when it comes to that industry. So I will give you the stage, Will. Thank you for being on.
Hey, thank you, Daniel. Appreciate it very much. Yeah, it's crazy times in the mortgage business right now amid the COVID crisis, as I like to call it. Before I get into that, the Kansas LoanMan thing, I wanted to brand myself. And so I was talking to a friend of mine and just kind of came up with it and decided that was the best way to go. It was a domain that wasn't taken. So it worked out really well at the time. And since then, it's actually done really well for me. I've had it for about 7 years now. And it's at least it's out there a little bit when you walk into a place, somebody who's not in the residential mortgage business, but in business and walks in and goes, yeah, Kansas LoanMan. I said, yeah, that's me. It was great. I got to say that was great. So it's helped me build a platform there where I can brand myself and at least stand out among the mortgage loan officers here in Wichita. There's quite a few here. And I've also started a Kansas LoanMan Mortgage Minute YouTube channel. It'll have some of this content on it as well. And it presents a weekly minute to 2 minute on different topics in the mortgage industry, like down payment money, credit scoring, different types of loans, that kind of stuff. So just getting information out there for people on YouTube, Instagram, Facebook, all of those social medias. Now, as far as what's happening now in the mortgage business, this is hot off the press. Today, we got the phone call. If anyone knows who Penny Mac is, Penny Mac just backed out of the mortgage business. They just stopped servicing loans in the mortgage business. Now, those of you who may not know that, or know who that is, that's a big, big deal. So the mortgage business has changed a little bit. Things have changed as far as who can qualify, what the rates are going to be, what the cost on the loans are, and how simple it's going to be to get a loan. So there's a lot of change going on. I'm not going to get into a ton of detail on that because it's a lot of technical stuff. If you want more information, you just have to get a hold of Kansas LoanMan to do that. But as far as the truth on interest rates, rates in the last month have flip-flopped around so many times. 2 weeks ago, there were people securing in interest rates in the low 3% for a 30-year fixed mortgage. That's been unheard of for the last 5, 6, 7 years. I've been in this for about 18 years, so I've seen a lot of changes. I've lived through 2008. I was in when I was giving away 3% rates on 30-year fixed mortgages, which has been a while ago, and now it was getting really close to that. On March 10th, however, the market changed. Stock market, all of that changed. Rates went up a full 1% to 1.5% in 1 day. Unprecedented, never happened. So the truth of mortgage rates, you're going to see a lot of leftover advertising, if you will, residual advertising that was paid for before everything changed that's telling you, oh, you could refinance it 2.875. You can refinance it under 3.5%. It's just not like that anymore. Rates have changed. In fact, in a lot of places, they've changed so much to even get a rate, you'll have to pay now. That was hot off the press today. So the mortgage business has completely changed just within a matter of hours on how we're going to be doing business and how we're going to help you do business and still buy a home in this environment. Now, here's the good news. I can still get you into the 3s for a 30-year fixed rate. We can still do that. We can get you there for a relatively low cost. We can get you there and not take a lot of money out of your pocket to do it. So even amid the changes that if you've watched the news today, you'll see it, you'll hear it. There's a lot of traffic, a lot of chatter going on right now about it, how things just really took a complete 180 and flip-flopped around upside down. It's still a great time. So leads me to the next part of tonight is it a good time to buy a house? We're looking at how property values are up. It's what's been known as a seller's market, where they ask for a price, they're going to get it. It's a feeding frenzy. If you're looking at a house, you better make your best, brightest offer right up front and get it done before you walk out of the house, or that house will be gone if it's a decent piece of real estate. That is not even embellishing at all on how it's working. Multiple offers, houses selling before they literally hit the market because of agents internally putting out there, hey, I'm going to be listing this home, and people coming out with buyers before it even hits the market. That's still the case today. Here's the good news for you. If you're looking to buy a house today or even sell, it's still a great time to buy. You're going to get a better rate than you would have gotten 6 months ago. You're going to do it for a nice price. It's going to be a market value, not above market value. So you're going to get into a house. You're going to be able to get a nice low interest rate, which will offset the fact that the market is at a high right now. You'll still have a nice low payment. And we've still got some wonderful programs that'll help you with getting into it with as little out of your pocket as possible to purchase a home. So when people are looking at rates, and they're going to begin to see over the next week to 2 weeks, as things begin to solidify again, how rates have went up, how rates are a little bit different, how costs have changed, and also with people getting laid off, going on furlough and living on unemployment, those people are no longer eligible to buy at this moment, because those are things we can't confirm are going to be long-term income. So if we can't verify that, we can't give you a loan. Now that's across the industry board. That's just not myself with the company that I work with. So is now a good time to buy? It's a really good time to buy. I think prices are going to solidify and soften a little bit. They're going to not be going up because of the amount of buyers that aren't going to be in the market. So if you are a buyer, today is a great day to buy. Nice low rate, less of a feeding frenzy. A lot of people are not going to be going out looking at homes because they're afraid of the COVID. So it's going to be a little bit lighter in that regard. Give you a little bit more shot at the house. You're still not going to be able to offer them 20% less than they're asking. However, you will have a shot at buying a home that fits you and your family. So the real question is, when you're out shopping today, being a good time to buy a house, is this a house that I can see myself being in for the next 10 years? If it is, make a really good offer. Get your realtor in touch with me. We can show them how they can have the seller pay your closing costs, which is very common here. So you'll be out minimum amount of money and have the lowest payment possible in the market today. So I want to encourage everyone, now is not the time to run and hide and put your money in a basket buried, or in anything that's going to bury in the backyard or the cookie jar. Now's the time to keep your money in the bank and use it to buy a home. Get somewhere where you can feel comfortable for your family. The motto of this company is helping you make it home. U.S. Mortgage is who I work for, and their motto is helping you make it home. And now's a great time to make it home. If you can move in this environment and you can shore up for your family, what if things get worse? What if we literally have a quarantine where you can't go outside? Do you want to be in a place you can call your own? Or do you want to be stuck in that crappy apartment you've been living in, or a place that you don't have enough space for you and your 20 kids, homeschooling at home, having to work at home? I have 4 kids. So I completely get the, oh my gosh, get out of my face. We've been together way too long type of thing. Truth is, if you're in a house that has enough room, at least everyone will have their own room, and you can potentially have your own space to have your office to work in besides just the kitchen table. So if you're looking to buy, looking to expand, looking to get into a place that you literally can call home, now's the best time to do it. There is no better time than the present to do it. And that's not the salesman in me talking. That's good market wisdom with where rates are, where prices are, and where they possibly could go, which is a big unknown. And so it's better to buy now while you know what you have, that it's a good market to do it in. And especially with less buyers being out there now, because now there will be a lot less buyers out there with the new regulations that came in. If you can still buy, it's your time to get into a home. Get out there, start looking. Go online. Do visual tours before you go to the house. See if it's something you really sincerely have interest in versus just saying, yeah, I'll go kick the tires a little bit. Look at the house. If you have interest in it, get a hold of your realtor, have them take you out there. Now's a great time to buy. What is the next step for those of you who want to buy a house? That's the question I get when I get a call for an application. They say, hey, I'm thinking about buying, or if one of my realtors refers someone over, say, hey, call this individual. They want to pre-qualify or pre-approve to purchase a home. I'll talk to them about what the next step is. Call me. We'll have a conversation. I'll walk you through a few options. I'll walk you through just a couple common questions of home buying. And then the next step is for you to actually fill out an application and to get pre-qualified. Like I said, there's no better time. And we've got some wonderful tools that you can fill that thing out, and I can have you pre-qualified within the hour. I have an app at the Play Store. It's called USM Power. US, the letter M, and Power. If you download that at the App Store, you click Apply. Choose my name, Will King, and you're off to the races. Takes 5 to 10 minutes. You only have to answer the questions you know. We'll worry about the rest of it and fill in the blanks as we go. So we'll make it as simple as possible for you. And again, it's about a 10-minute process to fill that out, have it submitted between myself and my assistant, Danny, who is my right-hand person helping me through the process. We'll have your credit pulled, we'll have your scores, and we'll be able to get you pre-qualified within the hour. So again, if you're wanting to go look at a home, if you want to get pre-qualified, if you've been out looking for homes and you've not actually been pre-qualified or pre-approved yet, get in here. Let's get you off and racing into the market today. Again, it's a great time to buy. I will encourage everybody with the new things that are coming down the pipe that were fresh, hot off the press today. If you've got a credit score below 640, get in touch with me today. Get in touch with your loan officer. If you're working with someone that you like, that you want to continue to work with, I completely understand. I think I'll probably do a better job. But seriously, get in touch with him. Talk to him about your credit score. Talk to him about what you need to do to continue to be a buyer in this market. If you're below a 640 score, we've got to talk today to try to help you get your score up where you can actually still qualify to get into the home. Some of the changes that happen today will affect you with a score of below 640. With a score even below 660, you'll be affected with the new regulations and things that came out. Again, I won't go into the alphabet soup details of that. You'll have to get in touch with me for that. However, I just want to warn you, it's a good time. It's a good time to be very cognizant of where your credit score is. And the only way to do that is to get in touch with your loan officer so they can do a mortgage pull and tell you exactly where your score is at, tell you exactly where you're going to fall into the market. And if you don't qualify today, talk to them about what you can do to get your score up as quickly as possible. No one should be told no on buying a house. And I'm going to catch a lot of flack from my constituents on that one. The truth is, if you want to buy a house, you can. You'll have to put some work into it. If your score's in the mid 500s, if you're not above a 620, if you're below a 640, you'll have to put some work into it. But if you contact a knowledgeable professional like myself, we can walk you through the process. That will be your next step into getting into a home. So as far as the market goes, as far as surviving and home buying in the COVID crisis, there's no better time than the present to fill out a mortgage application, to get in touch with me and allow me to walk you through the process on how to get you into a home with the best rate, the lowest cost available today, with the best payment for your family to keep as much of your money in your pocket monthly and as much as your savings for the down payment in your pocket in the upfront as well. So you've got more money in the bank just in case. We never know what's coming down the pipe. Want to protect your family, want to help you make it home. That's what the Kansas LoanMan does. That's it. That's what I had to talk about tonight. If you have any questions, reach out to me. Like you said, everyone's muted, so we can't see any questions, can't hear any questions. So at this point,
yeah, I am going to open it up. Let me go ahead and open it up if anyone does have questions here. As we're waiting on that, I do have a couple. If you could give us some, what I'm looking for is what changes the rates, who controls that, and are there some indicators that we can see ahead of time if someone may be an investor or just someone that's looking to just purchase another home, refinance? What are some indicators that could go up or it could go down?
Well, it's interesting. It's tough to predict that kind of thing. And the indicators, it's the 10-year treasury that we're semi-tied to for interest rates to be technical. One thing we're not tied to is the Fed rate of money. The Fed rates lowered money to 0 to 0.25%, and guess what? Rates went up. So it's not tied together. So the traffic you're hearing on the lending of money has nothing to do with mortgage rates in the sense of it following each other and really being attached. It's not.
Can you educate us on the difference? What does the Fed rate affect, and why doesn't it affect mortgage?
My understanding is the Fed rate affects the borrowing of money. If you looked now, there's cars being advertised as 0 down. Well, why do you think that is? The Fed sent money out to be lent out to consumers, and the Fed rate is now at 0, allowing those loans to go out at a better percentage. It's interesting that consumer money going out to the consumer, car rates, those kind of things, possibly even commercial loans could have a little nicer rate at this point in time. Money being lent out on a consumer level, which a mortgage is not a consumer loan, so to speak. It's a mortgage loan. Consumer loans are cars, personal loans, those kind of things could potentially see some lower rates out there. Now, that's my humble understanding of it, not being a complete expert of the Fed rate. However, it doesn't have anything to do with mortgage rates. And I get so many phone calls about that, and I have to tell them, I'm sorry, there's no 0% loans today for mortgages. However, you can still get a low rate. And if you need to refinance and you've got a rate above 4.5%, we should probably talk. Now could still be a good time for you to do that. But as far as indicators for mortgage rates, that's a tough one. It's really tough to pinpoint it. When the stock market started doing its thing and going down, rates and just imploding, so to speak, and people losing money left and right, mortgage rates went down. In a really good economy, what are mortgage rates doing? Well, if you look in the 90s when Clinton was in office, mortgage rates were higher than they are today, 2 to 3, 4%. I wasn't in at that time, but we have a historical chart that kind of shows us. Around after 9/11, there were some things that happened with going to Desert Storm and Desert Shield, and it caused rates to go up. Economy kind of went into the tanker, rates kind of went up a little bit. So it's hard to tell what the indicators are. Right now, with what's going on in the economy, rates are really good. They went down when the economy, when the stock market rather went down. They followed suit and came down a little bit. That's not necessarily an indicator, but if you watch the 10-year Treasury, if that goes down, we go down. That's kind of how rates work. It's more of send me an email, and I'll tell you where rates are that day. It's really hard to know. That's why I say now is a great time to buy, because if you get in the market now, that means that you are positioned in the market to be able to purchase. You're also positioned to see what rates are going to do next. If you haven't been pre-qualified or pre-approved, you're going to miss out on the best rates. If they go down tomorrow and you're not out there looking and you don't have a contract, if they go back up before you get a contract, you're not going to take advantage of that. If you're wanting to refinance, you're wanting to get the best rates, get your application in now. Even if we don't proceed with it, but we hold steady and prepare you and get you ready and get everything in the system to where all we have to do is click a little button to submit your loan to start. If you're not there, you could potentially miss those rates by a day, 2 days. It's possible. So it's the indicators, again, long answer, short question. The indicators, it's hard. It's really tough to put out there a real indicator for it. The only thing you can really do is keep in touch with your mortgage person and what they're thinking about interest rates. It's not something I'm going to actively post on my Facebook page because they are literally changing by the hour. Literally every few minutes, we're seeing loans come up a little bit different with what we call the pricing and the interest rate and the margins behind it and how it works and all the technical jargon that we get paid the big bucks to know. So I hope that answered your question.
Yeah, what I'm hearing is it's just a good, safe bet to get you the information so that when the rates are right, you can click the right button to get that thing moving in the right direction. I guess the follow-up question to that would be, once you click that button, whatever the rates are at, does that lock you in at that place? Or is there still some factors that come into play? I know obviously credit score can affect that, income. What really, once you get locked in, let's say at whatever that rate is, what affects it going up, I guess, if, so yeah, like your credit score and your income, how does that affect the actual rate you get?
That's why I'm asking everyone to get in and get your application filled out and get pre-qualified and pre-approved, because we'll know your credit score. We'll factor in your income because you'll be getting me documentation. We'll factor in all the things that go into that and go into play, get an idea for what your budget's going to call if you're buying so that you can be looking at the right prices. And if you're refinancing, what it's going to take to save you money on that loan interest rate wise. And we'll have a ballpark idea of where you're going to be. So that once you say, hey, let's roll with it, I click submit. Once you've electronically signed your documents with us specifically, you're good to go. We can lock your rate. We can let it float if we think they're going to go down, or if you want to play the market, as I call it, play the market, think that they might go up or down. And you're like, well, I know they're not the best today. Let's see what they do over the next week. Here's what I'm hearing in the stock market. Here's what I'm hearing on this and that. And I want to wait on locking my loan. You have every right to do that. I'm here to let you know where rates are today. And if you like my opinion, give you my opinion. Sometimes I have one, sometimes I don't. Sometimes it's like, well, your guess is as good as mine today. However, today, here's where you're at, and here's what I can say to you. It's a good day to lock a loan. It's a good day to do a loan. It's a good day to get this thing rolling. So once you have sent in your information, we say, look, you're definitely pre-qualified, pre-approved to either purchase or to continue with refinance, and the savings make sense for you. It's up to the buyer, the owner, to say, yeah, let's move ahead. Let's do this thing. If you're refinancing, you tell me that. We'll send your loan in, get it locked in, get the paperwork out to you as quickly as possible so that we can lock your rate if rates are good that day and you want to take advantage of the savings. And for purchasing, that gives you the option to go put an offer on a home. And if that seller snaps that thing up, which they snap it up pretty quick, within 24, 48 hours, you're definitely going to be under contract if you give them a nice offer and they like your offer. Once you do that, we get the contract, we submit the loan, we can lock your rate in. So it eliminates your chance to miss out on what's going on today. And it also positions you, if rates do something crazy and we think they may come back a little bit or you're just not quite ready, at least it positions you into the place where you have the option of taking control of your own mortgage rate and of your own buying situation.
Awesome. Thank you for sharing that. Another question I have, you talked about some different programs that are available. And is there a difference in how your pay structure works? I'm kind of thinking of the investment industry where you have a fiduciary where they have to give you the best advice. And sometimes that's not the case, where they're getting paid more off of certain things they sell you. How does that work in your industry if you're all right with being open with that?
Completely open. What you are charged, what rate you get has nothing to do with what I get paid. So my best interest is to help you get into a home or to help you refinance. I do not get paid until you close on your loan. So it's in my best interest to be honest with you, to make sure you know what's going on, to make sure that you've got all the best cost rate possible and everything put into place. Because if we don't close, homie makes no money. And I got 4 kids to feed and a household to support. So the truth is, I found that if I work in the best interest of my clients, then it works in the best interest of me. And if it's not a good time for someone to refinance, it's not giving them enough savings, or it's not meeting their goals, I'll tell you not to do it. It's not worth making a deal, closing a deal, and having someone unhappy with the situation and really ticked off. My goal is to do my best to make you as happy as possible through the process. Sometimes that's kind of tough because the process can be a little taxing. It can be a little heinous with everything that we have to document, what we're going to ask you for. I tease people. I say, hey, if you got an animal, cat, dog, I might ask the blood type before this is done. Just be ready. It's coming. We might want it. We might need it. It kind of feels that way at times. But at least you're positioning yourself. And like I said, I don't make any money until we close a loan. So quoting you a higher interest rate or charging you more fees has nothing to do with my paycheck personally. And it really has nothing to do with the profitability of the bank. We've already got our margins built into what we do and how we work.
So what are some of the biggest mistakes people make before coming to you that really don't help them get set up in a position where they can make a purchase?
A couple things. One of the biggest mistakes is thinking that your credit score isn't ready now. You think you know what your score is. You've been checking Credit Karma. which can be a little less than accurate at times. You're getting the score off your credit card. You just purchased an automobile and you want to think that that score may or may not be yours. One of the biggest mistakes in preparing to buy a home is not talking to a loan officer to find out where you're really at. That's huge. People prejudge what their score might be. I had a friend of mine that we just started a loan for him. He thought his scores were in the low 600s. It ends up they're in the high 600s because he had just made a purchase and they said his score was low. And he had looked online at something else. They said his score was low. Now, typically those scores online are fabricated higher than what it really is as a mortgage score. But that's just a good example of how you just don't know. It's just a good thing to find out. A couple things people do wrong. Not putting your money in the bank for the down payment and leaving it there. Pulling out money and I want to save it. So I'm going to put it in the cookie jar. I'm going to bury it in the backyard. I'm going to put it in the safe. There's nothing wrong with having money available. Nothing at all in this environment, having cash available. That's a great thing to do. However, if you're saving to purchase a home, that money's got to be in the bank. We have to verify that money's been there for a certain period of time for you to purchase that home. And the reason is if you put cash in the bank, we don't know where it came from. You could have got a loan for that. And then it affects your purchasability. We have to know that the money you're using is not coming from a loan. It's not coming from ill-gotten gain. Somebody just didn't give you that money that's not qualified by the guidelines to be a donor to help you purchase a home, because there are guidelines on who can actually help you buy a home by giving you money. So that's a common mistake that we have to try to help people fix. And the problem is it could set you back 60 days from buying. You put the money in the bank, the cash money in the bank, without talking to a mortgage professional on how to do that. You could have to wait 60 days. You could have to wait 30 days before you can actually purchase a home, which could mean the home that you want just got purchased. It could mean that rates jump a point. It could mean you miss out on the home that was meant for you and your family. So I just encourage you, get in touch with a mortgage professional, get in touch with me, and we'll talk about those things. I think a lot of it is also preparing. They talk to their friends and family about their home purchase. Big mistake. Every loan is different. If you have a twin brother, sister, their loan's different than yours. For crying out loud, spouses who have the exact same things on their credit, their scores are different. Isn't that amazing? They have a different date of birth. They have different social. They've lived at different addresses at some point in time in their life. Their scores are going to be different. It's very, very uncommon to find the same score. It does happen, but very, very seldom. So when you're looking to buy a house, the best advice is not to get advice from someone who just bought a house. Get advice from a mortgage professional, because they're going to tell you things. Oh yeah, I got this 3.25% rate. We closed last week, which means they locked their rate 30 days ago. I only had to put $100 down. There's a HUD program allowing for that for only HUD homes. I purchased out in Cheney, and there was a zero down program. I think it's called something like Rural Development. There's a map that says what properties are qualified for that. It doesn't mean that you buying in Wichita are going to have a zero down program. I only put 3% down on my house, and I didn't have any monthly PMI. Well, there's a program that would allow you to not have monthly PMI for putting a minimum 3 to 5% down. However, if your score is not high enough, you're not going to qualify for that program. So a big mistake is talking to everyone else but a mortgage professional about it, taking their word for it, because most of the time it's not going to be right. You're a different person. You're an individual, and your loan is a living, breathing organism according to your income, your debts, your credit score, and the price of the house that you're going to buy.
Awesome. Last question I have for you is the biggest mistake people make when it comes to their credit. What do you see that pops up as just something that dings it the most? And also, what's a way to help impact that and create really immediate, but also long-term effects on the credit score?
That's a great question. I've got a couple things right now. If you're ever going to buy a car, try to get your financing in place first. Because if you go in with your financing in place first, then the chances are if you go to a car lot that will try to find a loan for you, when they do that, they're shopping at multiple places. It's not like a mortgage where when you come to me, I pull you one time and we've got everybody in place and we know what our people that provide rates do and are willing to provide for us. In the car business, it just doesn't work that way. And that's nothing against car guys. The fact of the matter is they're just doing their best to get you into a car that you want. So go in with your car financing already. And if you want to do the financing there, just know more than likely your credit will get pulled multiple times. Okay. So just kind of know that. So if you go in with your financing, it'll save you some of the pulls that will drag your score down. Other things with credit scores, and I find this to be fascinating. Don't be afraid of credit cards. It's not the credit cards that'll get you in trouble. It's how you use them. Credit cards are one of the best things to build your score. Go open up a credit card, put Netflix, put the gym membership when they start charging again back onto that. When they open back up, you can actually go in the door. Put Prime on it, put a monthly recurring expense on it, and then when you get your bill, pay it off completely. That means that you'll always show a charge on your credit for that account, and it'll be minimal. And you'll never pay a penny of interest to that credit card company that's charging you 15, 19, 20%, because you're going to be paid off every time your statement comes in if you're using it wisely. Fill up at the pump for a tank of gas one time a month on that credit card to keep it active, and then pay it off. If you do have credit cards and you're trying to eliminate debt because you've had to use them to live, especially right now, a lot of people are going to be living on credit, just to survive. And that doesn't mean that they're people who have overextended themselves and done a horrible job with their credit. Just some people are going to have to do that, which is completely understandable. Make sure to make your payments on time. Make sure that if you do pay a credit card off, you don't close it. If you close it, it no longer helps you build your credit. If you're not going to use it, pay it off, cut the card. I still recommend using it once a month and then paying it off and being responsible with your credit, because that'll help build your scores. Credit cards are a good score manipulator for us in a positive sense. If you've got a $1,000 card and you've got a $500 balance and everything looks pretty good on your credit, but we need to boost your score 10 points to help you qualify for a better rate, a better program, then you paying that card down to say 10, 50 bucks and letting it sit there, we can actually rapid rescore your credit up those 10 points. And we actually have a computer that tells us exactly how to do that. Another tip on your credit, just know that if you've only got personal loans or car loans on your credit, when those pay off, they stop helping you. It's all about what have you done for me lately on your credit. If you don't have a credit line open anymore, once it pays off, it looks good for your history, but it's no longer there to help boost your scores and impact in a positive direction if you're having your credit pulled, or if there's a medical collection that hits your credit that insurance was supposed to pay and you can't help those. It's going to take your score down a little bit because you have nothing to help boost it up, to help your credit stay solidified and to help the bureaus know, oh, this person pays their bills on time. Oh, this person has a lot of credit availability. That means they can handle more credit. That means they can handle getting more offers, which means we need to pump their scores up. They're a great consumer and we want to reward them with a better score. I hope that helps on some tips. Keep your credit cards open. If you don't have balances, use the card once a month, pay it off, don't pay interest. If you pay an auto or a consumer loan off, which is great to do, if you're getting a rate on that, don't pay it off early or too early. Let it help build your credit longer. And if you are paying off, open up that credit card. Make sure that you've got your own financing, if you can, going into a car place. If you want to get 0% like GMC is, or one of the big car companies, Toyota, whoever, is doing a zero offering and you want to take advantage of that, make sure going in that you say, look, this is the one I want to take advantage of. I only want my credit pulled one time. If I can't meet that one, then I've got my own financing in place. Be smart about it. And know that if you haven't had your credit pulled more than once or twice in a 30 to 60-day period, a mortgage professional pulling your credit is not going to drop your score. It's okay to have your score pulled once in a while, to have someone take a look at it, and it's not going to drop your score. If you have a question about that, get in touch with me. Let me know how often you've had it pulled, and I'll give you my best judgment with 18 years of experience of doing it.
Awesome. Well, that being said, how can we get a hold of you moving forward, Will?
All right, we've got a couple options here. You can download the app at the App Store. USM as in mortgage power, USM power. Click apply, click my name. You can apply there. You can reach me at Kansasloanman.com. You can reach me at Kansas LoanMan YouTube channel and Facebook. I have a Facebook page as well. My name is Will King. I'm very visible. My number's 316-312-2936, Kansasloanman.com.
Excellent. Thanks again, Will. And we appreciate your wisdom tonight.
Thank you, Daniel. Appreciate having me on.